Welcome back to the Farm Show on Westplex Talk 1045. It is our third segment, C Block, for Saturday, March 7th, 2026. One of my favorite things to do on this show is go back and play select excerpts from publicly traded companies' earnings calls. We get a lot of insight from these companies on what the past quarter looked like, what the past year looked like, what the upcoming quarter and years look like. We also get some brutally honest commentary on what is working with farmers and what is not working with farmers. I should also point out that when we play these excerpts from today's earnings call, nothing we discuss is financial advice. It's merely informational, educational, and for entertainment purposes. Today, we'll be playing the earnings call highlights from AGCO. Let's get right into it. Let's start off with some commentary from CEO Eric Hansotia. He gave a general overview of how the quarter went.
We closed the year with another strong quarter, delivering an adjusted operating margin of 10.1% on fourth quarter net sales of $2.9 billion, which were up 1% year over year, or up nearly 4% excluding the grain and protein divestiture. EAME continued to be a powerful driver, delivering 8% growth and extending its multi-quarter record of strong performance. On a full-year basis, we delivered a 7.7% adjusted operating margin. Adjusted earnings per share were $5.28 on sales of $10.1 billion, reflecting a 13.5% decrease versus 2024, or just 7% excluding the divested grain and protein business. These results highlight the disciplined execution of our global teams, driven by our three high-margin growth levers: sustained cost discipline and the positive impact of our multi-year structural transformation. We operated at intentionally low production levels, and despite a soft market environment that weighed on industry demand, we ended the year with significantly lower company and dealer inventories compared to 2024, a favorable outcome that strengthens our position and demonstrates meaningful progress. Our adjusted operating margins are among the best in AGCO's history and the strongest we've ever delivered at this point in the cycle. We have nearly doubled our adjusted operating margins from prior troughs and are close to prior industry peaks, clear evidence that AGCO has structurally changed to a higher performing and more profitable company. I want to thank the AGCO team for their disciplined commitment and impressive execution throughout the year. Their agility allowed us to maintain solid performance, repeatedly exceed our expectations, and continue advancing our farmer-first priorities.
I should have mentioned when we set up that clip that when I mentioned quarterly earnings call, this is the 2025 Q4 earnings call, to be specific. Then CEO Eric Hansotia got into specific segments of the AGCO markets, and he mentioned some names that you'll recognize.
Building on the transformational actions taken in 2024, including the formation of the PTx business and the divestiture of the majority of grain and protein business, 2025 was a year focused on advancing our strategic ambitions in agriculture machinery and precision ag technology. Our redefined portfolio and focus are where AGCO wants to be, poised to continue serving farmers and investors better than anyone else when demand strengthens. Our PTx brand continued to gain significant momentum. During 2025, we introduced 14 new products across the crop cycle, expanding the industry's most comprehensive retrofit precision ag portfolio. We also made substantial progress expanding our dealer network, ending the year with more than 70 global PTx elite dealers, more than doubling the amount from the start of the year. These dealers sell both precision planting and PTx Trimble products, enabling us to broaden product coverage and deepen customer engagement. This independent retrofit network, focused on the mixed fleet, remains an absolute clear differentiator, providing the comprehensive product expertise and the broad equipment compatibility that today's farmers require. These PTx elite dealers are supported by more than 300 Fendt, Massey Ferguson, and Valtra equipment dealers, 200 C&H dealers, alongside continued sales to more than 100 OEM customers. This expanding footprint is strengthening our global market presence, increasing the number of farmers we can reach with our industry-leading smart farming solutions. Fendt delivered a standout year of market performance in almost every region. In North America, we gained large ag market share, underscoring the strength of Fendt portfolio and the power of our team of experts and dealers. With some of our largest dealers switching to the IDEAL combine last year, it further emphasized the strength of the Fendt full-line product offering and our ability to accelerate our performance when North America large ag begins to recover. Our parts and service business continued to perform well across challenging market conditions. The FarmerCore model, combined with digital engagement, 24/7 online parts access, machine configuration tools, servicing capabilities, and industry-leading parts fill rates, continue to support this high-margin growth lever and drive meaningful progress. Strong execution also drove meaningful cost actions in 2025, resulting in a $65 million bottom line savings through continued operating efficiency across the organization, reflecting a real focus on performance improvement. We anticipate a further $40 to $60 million of incremental savings in 2026. Our overall confidence in the business is reflected in $250 million of share repurchases in the fourth quarter, part of our $1 billion capital return program announced last year.
If you're just joining us, you're listening to AGCO's Q4 2025 earnings call from last month, from February. This is not financial advice. It's only provided for educational, informational, and entertainment purposes. CEO Eric Hansotia went on to talk about what to expect from 2026.
As we look at 2026, we will continue to navigate a dynamic phase of the industry cycle. Trade patterns and record global crop production continue to compress farm margins, with corn, soybean, and wheat prices near break-even levels. Despite this environment, our operational discipline positions us well for continued progress. Over time, we continue to expect increased adoption of precision ag technologies as farmers constantly look for ways to profitably increase yields. Entering 2026, current market conditions continue to moderate demand across most equipment categories. Yet we remain able to advance our technology strategy and expect long-term positive industry progress. Slide 4 details industry unit retail sales by region for 2025. Industry retail sales across all major regions were lower in 2025 as the market adjusted following several years of elevated demand. In North America, industry retail tractor sales were 10% lower compared to 2024, with larger horsepower categories accounting for a greater portion of the change as the year progressed. Combine unit sales were 27% lower year over year. Current farm income dynamics, evolving grain export demand, and elevated input costs continue to guide purchasing behavior, particularly for larger equipment heading into 2026.
Okay, so let's pause for just a second here. Eric says that, quote, current market conditions continue to moderate demand across most equipment categories, end of quote. And then he says sales were down. That makes sense. Now, Eric went on to talk about other parts of the world and sales in those regions. And if you're like me, really, who cares about other parts of the world? Shareholders do, but most of us probably don't. The CEO then goes on to talk about PTX's 2026 Winter Conference, and then highlights 3 particular areas he's most proud of.
Slide 7 highlights key takeaways from our premier Precision Ag event, PTX's 2026 Winter Conference. It's an event that brings together thousands of farmers and dealers on site and virtually. And this year was the first showing of the full breadth and depth of the PTX portfolio. More than 4,000 farmers, most under enormous pressures currently, focused on learning practical solutions and strategies for technologies that can be implemented immediately to improve productivity, efficiency, and returns, a high-value opportunity in today's market environment. As you would expect, the feedback on the event and new product introductions was exceptional, as farmers could clearly see how we were innovating to make them more productive and more profitable. This year, 3 technologies delivered notable impact. First, Symphony Vision. Our vision-based spray technology uses intelligent cameras to continuously adjust application rates based on weed severity, delivering a 60% chemical and cost savings. This year, we introduced Symphony Vision Duo, a dual nozzle system that allows farmers to spot spray contact herbicides while simultaneously variable rate applying residuals, fertilizers, or fungicides in a single pass, supporting better input management and higher field efficiency. This is a one-of-a-kind injection system that mixes the solutions, not only delivers meaningful cost savings from reduced chemical usage, but also delivers significantly higher uptime for farmers than other systems just can't offer. As with our broader precision planting portfolio, farmers own the technology with no per acre recurring fees, reinforcing a strong value proposition. Second is AeroTube, a breakthrough seed delivery system designed to improve plant orientation at placement. Conventional systems drop seeds randomly into the furrow, which can lead to uneven emergence and leaf alignment. AeroTube places seeds in an optimal orientation while controlling depth, spacing, and singulation, enabling each plant to capture more sunlight and reach its yield potential, a clear productivity advantage. When you think about the significant yield decline for plants that emerge just 48 hours later than the others, the opportunity is huge for our farmers. Third is Farm Engage. Launched in 2025, our farmer-facing digital platforms integrate machine connectivity, agronomic insights, and task management across brands and platforms. Farm Engage brings together functionality from AGCO Connect and Fendt 1, and will be included in all model year 2026 Fendt and Massey Ferguson machines sold in North America, serving as a central hub for day-to-day farm operations. Each of these innovations reflect how we listen to the farmer to understand the issue, then deliver practical, scalable solutions that address real on-farm needs and help farmers operate with greater productivity, efficiency, and profitability. I couldn't be more excited about the portfolio of award-winning products we have for our farmers. And as I look forward to further introductions later this year, I'm even more confident that we will continue to be the most farmer-focused company in the industry, offering industry-leading smart farming solutions.
Eric then turned the call over to CFO Damon Audia to talk about numbers. We're going to skip the financials here. The first question, and you know the Q&A is the best part of these analyst calls. The first question was from Mig Dobre with Baird, who asked about share gains.
Overall, AGCO turned in the highest market share in our history in 2025, and that's global. So all over, when you take a look at where farmers are seeing value, they voted with their order book to come to AGCO. What's underneath that? Net Promoter Score, which is our customer feedback to AGCO, hit its all-time high in 25. So the perception of the overall value of the product, the dealer performance, the services, the data management, data platform, all of that is coming together, and we feel like it's fueled for growth. We had a record patent filing in 2025, so we think we've got a great set of innovations continuing to come through. So that's the macro. Then you drill into North America. It was the largest one-year gain in market share for large ag in North America. Largely, our portfolio has been what it is. It's now working with the dealers to get the most out of our partnership with our dealers to serve customers. We've got several focus areas. It's not so much about conquering white space. It's largely about penetrating the space the dealers are already in. And so we've been looking at performance by county and getting a very granular work plan together with our major dealers and saying, how do we go change how we're supporting the farmers? About 85% of our big dealers now have adopted FarmerCore, at least the early phases of it. They're showing where their service trucks are and doing much more of the work on farm. So, that FarmerCore combined with detailed work with our dealers matched up with an industry-leading product portfolio, we think is starting to show the early days. We also made a bit of an org change to even sharpen our focus on North America. So that's kind of the machinery side of the business. Now, if we switch over to PTx, had 14 product launches. There's essentially an innovation and an education side to that business as well. On innovation, we had 14 product launches, way ahead of what we would have expected a year or two ago. The feedback at Winter Conference, as I talked about, I go to that every single year, super strong. Some of the best farmers in the world. I think it was one of our best Winter Conferences. So the innovation engine is going strongly. But the bulk of the work now is on channel development and establishing our elite dealers, which is those dealers that carry the full product line. They're the tech dealers. They don't sell tractors and combines. They just sell tech. Establishing them. We've grown that to a little over 70 dealers now. We only had about 40 we have added about 40 in 2025. So it's a channel story there as well. If you look at retrofit, it only is down about a third as much as the overall market. So our thesis all along about serving farmers, serving the mixed fleet, serving every farmer regardless of brand, is playing out. As long as you keep innovating, that farmers are thirsty to be, whether they're in a peak or a trough market, they're thirsty to be more productive and profitable.
I like the use of thirsty there. Those farmers, they're so thirsty. Want to get one more question in? This one's from Esther Osanaya from Morgan Stanley. She asked about the cadence of tariffs.
Overall, given the timing of the tariffs last year, again, as I think about that 65 million incremental, it's going to be heavily weighted here in the first half of the year. Because if you remember the timing of when tariffs rolled in last year, coupled with the level of inventories that we had and our dealers had, we really saw that start to pick up in the third quarter and more into the fourth quarter. So you're sort of looking at probably the majority of that 65 sitting in the first half, and then the balance of it sort of rolling in the third quarter, and then being somewhat neutral in the fourth quarter.
And from there, CEO Eric Hansotia wrapped it up with a spoiler about upcoming share buybacks.
So I just want to thank everybody for joining us today and some of the really good questions. 2025 reflects a meaningful progress year that we've made in transferring AGCO into a more resilient, better positioned company. We're executing with discipline and focus on what we can control in a pretty volatile market. And we're always staying focused on our farmer-first strategy that creates purpose for our employees. Our global team delivered a 7.7% adjusted operating margin in 2025. That's a high watermark and notable achievement at this stage of the ag cycle, best we've ever performed at the trough. I'm really appreciative of the commitment and results of our team and our dealer organization. We remain focused on delivering for all stakeholders. For our farmers, our innovation flywheel continues to spin fast with solutions designed to solve real on-farm problems. We recorded a record Net Promoter Score and have a record set of patent filings. So farmers like what we've got, and we've got more coming. For shareholders, we executed a $250 million accelerated share repurchase in quarter four as part of our $1 billion program, and we're in a new chapter in that regard with our ability to do share buybacks. And share buybacks are probably coming more in the future because we had a record free cash flow of $740 million in 2025, all-time high watermark for AGCO. Our 2026 outlook reflects our ability to keep earning the trust of farmers and OEMs, transforming our dealer network, gaining market share, driving our high margin growth levers, and executing structural changes and cost initiatives that will position us well for when demand recovers. 2025 was the bottom of the trough, and the fleets in our major markets are at the peak of their age. So we expect that the future looks brighter.
Okay, well, that's optimistic for AGCO. Folks are going to be replacing their old equipment. That's all the time we have for today. You can hear a replay of this show on Sunday at 8 a.m. Be sure to join us next week, Saturday, 10 a.m.